Right. 1.8. A provision should be made for doubtful debts from debtors. The accounting concept. So they are talking about accounting concept. What is the accounting concept relating to this? Doubtful debts from the debtors. That means there is a provision. It should be made for doubtful debts. So it is entity concept. No, nothing is it. Nothing. So nothing is related to entity concept. Yeah. This is not related to entity concept. Sorry for the mistake. Right, so nothing is related to entity concept. And materially concept, no, there is no any relationship. Consistency concept, no, there is no any relationship. Prudence concept, yes, this is the answer. So you can directly find the answer. If you are, yes, there is a problem that the knowledge of accounting concept, that is very vital for accounting students. So having a good knowledge is recommended, right? So if you don't have a knowledge, proper knowledge in accounting concept, it is very difficult to do any exams, even in your working place. So that be clear with the accounting concept, right? So the answer will be number 3. 1.9. Which one of the following transaction is not recorded in the general journal? So purchase, if you take a journal entry or general journal, which one will not be recorded? Purchase of number 1, purchase of a computer for office use in cash. Second, selling a motor vehicle used in the business on credit. Yeah, definitely you have to use. This is a disposal. So definitely you have to record it in the general journal. Third one, an entry of correction of error. Error correction, there is no any other method of entering, so you have to use journal entry. And opening journal entries, yes, definitely you have to use general journal. So the answer will be purchase of a computer for office use in cash. Right, so you have to record it in the cash payment. Right, 1.1. Rani Limited has paid 120,000 as insurance premium for the factory building for the calendar year 2024. The accountant of the business recorded 30,000 rupees as insurance expenses and the balance of 90,000 as prepaid insurance for the financial year ended 31st March 2024. The accounting concept relating to this treatment is what? So basically, there are 4 accounting concepts they are given: accrual concept, going concern concept, revenue recognition concept, matching concept. So out of this, you must understand that he has paid, Rani Limited has paid 120,000 as insurance premium for the factory building for the calendar year 2024. So they have paid this 120,000 for the year 2024. The accountant of the business recorded 30,000 as insurance expenses. Why? Let me explain you this in the whiteboard. So if you look at here, let me draw a timeline here. Timeline is very important for certain questions. So in this timeline you can see they are paying it for the calendar year 2024. So 2024 starts from when? That is 1st January 2024. This is calendar year. That means it will start from January to December, end in December. 31st December 2024. This is called calendar year. So January, February, March, April, May, like that until December is the calendar year. But accounting year is different. Accounting year starts from when? Accounting year will start from here, somewhere here. Let's take here before this year. That means 1st April 2023 to 31st March 2024. This is the accounting year, 12 months. This is 12 months. So, how can you do this question? So, basically, they are paying from this date to this date, 120,000. But when you are recording in your accounts, you have to record it for your financial year. You don't use the calendar year for your accounting purpose. You have to use the financial year for your accounting purposes. So your financial year for the January, this payment was made on this date, 120,000. So this 120,000 will be for the whole year. In that your date, your financial year is closing at this date. So which means starting on January and ending in March. So there will be January, February and March. This is your financial year. This balance year, that is April to December, that is the next financial year. So now next financial year has not come. So what you have to do, you are in the current financial year. They are asking to, what is the question they are asking? Let me take out the question. They are asking, what is the accounting concern? So basically, they are saying that the accountant of the business recorded 30,000 as insurance expense, definitely, because they are in this current year for 3 months. So 120,000 divided by 12 months, which is 10,000 per month. So there are 3 months here for the current financial year. So 3 months into 10,000, which will be 30,000. And this is future. Next year. For the next year, they have paid in this year. So this is called prepaid. For the next year, that is advance payment, right? For the next year, we are paying this year. So it's a prepaid amount or advance amount, we can say. So there are 9 months remaining. So 9 months into 10,000. This is 90,000. So this is a prepaid expenses. So basically, these expenses, the time has not come. Time has not come, but you have paid it. Right, you have paid it as advance. So basically, this is called accrual. Right, this is called accrual concept. Right, let me go to the question. So here, accrual concept, yes, that is the answer. Going concern, no. Revenue recognition, nothing. Matching concept, no. Right, so the answer is accrual concept. Right, the next question says, state whether each of the following statement from 1.11 to 1.515 is true or false. Right, you have to say whether it's true or false. First question is, income and expenses are the elements of income statement. True, no? So in the income statement or profit or loss statement, we are mentioning the income and expenses and profit. So that's the true answer. 1.12 is liabilities which are expected to be settled after 12 months. So this is after 12 months. Period can be categorized under the current liabilities is false. Why? Because current liabilities mean liabilities which are expected to be settled within 12 months, within 1 year. That is current liability. So after 1 year mean, after 12 months mean, it is non-current liabilities. This is the same concept applicable for assets as well. 1.13 says categorizing assets of an entity as current and non-current asset is a practice of going concern concept in preparing the financial statements. That is perfectly correct. If there is no going concern, then you cannot categorize as non-current asset because there is no going concern. Since the business will continue its operation to a foreseeable period, so that is going concern concept, because there is next year for you, there is year after the next year for you, so that you can categorize it as current and non-current. That means you have next year means your liabilities, your assets is going to carry forward to the next year as well. So that is more than 12 months. So it's non-current asset. 1.14 confidentiality is a fundamental qualitative characteristics of financial information. This is directly given in your notes. Then this is false, right? 1.15 computers purchased for resale of a business are recorded under property, plant and equipment is false, right? So we can open another thing for computers and we can record it. Write the answer for 1.16 to 1.20 in your answer booklet with a number assigned to the question. So their first question is, they are asking list 2 reasons for accounting errors. Why there is accounting error? You studied about accounting errors. Why there is an accounting error? Because I can say many reasons for this accounting errors, but you can pick 2 of them. One is negligent. Yeah, negligent. That means doesn't care about the values, right? Very lazy, negligently making mistake. So that is one of the reason. And the other one is not having enough knowledge for accountant for doing accounting work. So we can say lack of knowledge. The other one is omitting or forgetting. We can say if we forgot or he omitted, then it can be an error or intentional fraud. Purposely he has omitted or done this in order to commit a fraud. So that's going to be an error. Fraud is going to be an error. Then incompetent mentality of the employee. That means he doesn't know what to do, right? How to handle certain situations, right? Because of that, there can be accounting errors. So the other one is define the term a liability. So in your examination for the next exam, they can ask you define the term assets, define the term capital or equity. So be ready for that. So define the term liability means that liability is a present obligation of the entity to transfer an economic resource as a result of past event. That is liability. Simple. It's they are directly given in the notes. Right, and briefly explain the meaning of specialized accounting software. So they are asking specialized accounting software. What is that? So basically, specialized accounting software means specialized means it's a specific accounting software. This is a software. See, this is the computer software that is designed to perform specific functions of accounting. So this is a computer software that is designed to perform a specific functions of an entity or of accounting. Right? So you can say that. You can also mention some example. For example, salary control software or payroll control software. inventory control software, right? You can say an example so you get the full marks, right? State 2 reasons as to why an entity prepares bank reconciliation statement. So when you are studying bank reconciliation, you might have studied this. Why there should be a bank reconciliation? We'll mention 2 reasons. So when you are preparing bank reconciliation statement, that means you are taking the bank statement and the cash book or bank book, and you are comparing and mentioning in the bank reconciliation statement the reconciling items, right? So basically, why you are doing that? So you can trace the errors in the cash control account of the business. You can trace the errors, and you can also have the ability to identify the frauds and minimize the frauds and errors and any manipulations. You can do that. Then you can prevent checks being returned or bounced, right? So these are the I have given 3 or 4 things, so you can mention any of 2 out of this. So briefly explain the money measurement concept. What is that money measurement concept? Money measurement concept means, in terms of accounting, transactions and events are recorded if they can be measured in terms of money, right? So you enter or you record any transactions or events of the business if you can measure them in terms of money. That is called money measurement concept. You should be able to, this is the first thing we study. You should be able to measure this transaction and events in terms of money. So for example, you can give purchasing a building for 5 million rupees, where you can measure the cost of the building in terms of cash, rupees, right? So that what you can do, you can recognize it in your accounting records and you can record it in the financial statement, right? Section B questions will be done in another video. Thank you very much for watching. Please subscribe, share and like the videos, and comment if you have any questions.